Hey, hello, welcome to Wish Data. This is Raj here from Wish Data. Today, I'm going to talk about specifically about a specific type of trading, intraday trading, which is also specifically on futures, right? So I have been doing trading for almost 17 years. A different type of trading strategies, different type of trading methods, and different type of instruments I used to trade, right? So, for example, long-term position trading, swing trading, long-term investment trading, and then option selling. Option writing is a specific strategy which I did for quite some time, which is a very good thing, but there are a lot of pros and cons with every strategies. And then some more strategies, key strategies is like leap strategies, right? So I always posted some leap roller coaster strategy trade alerts in our WhatsApp groups, right? So those kind of strategies, and one of my favorite, which I always wanted to do, is this intraday future trading, right? Why? Because see, that gives an in-depth knowledge about what's happening in the market and how we can play with the fast moving market, right? So this gives us an edge of daily look at where the markets are, what's happening in the market, and how we can play from from a long-term strategy perspective and also from an intraday perspective, how we can play this market to make as an edge for us to make money on a daily basis. Okay, will you be able to win daily? Absolutely, right? Any trading strategies will have their own drawdowns and their own percentage of win rates, right? So if we manage the trades properly at the right level with the right risk, knowing all the risk, that is very important, right? Knowing all the risks and knowing the right level of risk, if you play these strategies, I think we can still able to make it. Okay, so all we need to do is when to trade while we are in the market. You need to know what levels need to be traded, when to enter a trade and when not to enter a trade. Okay, that's very important, right? When to enter a trade, everybody, a lot of people can say, oh, okay, there you go, I can enter here, right? When not to enter a trade, very less people can talk about it, right? So that's very important for us to know when to enter a trade, when not to enter a trade. And third point is what level, you know, we need to enter a trade, and what level we need to exit a trade with a profit or either at a stop, right? So those four things are very very key. And the last thing, which is not the least thing, is the risk. How much of risk I am taking by taking this trade? Okay, that's very very important, guys, right? So with all that said, there are many ways of doing intraday trading. So people buy options, sell options, and then buy stocks, sell stocks. Every time when you buy and sell something or sell and buy something, you make money out of it, right? But what instrument you used to do, take that trade, totally up to us, right? Everybody has their own strengths and weakness, so we can play with whatever we are good in doing it, right? So, but don't keep changing the instrument, then you may not be aware of the nature of how the data flows for that instrument, right? So, I've been trading this NASDAQ and S&P futures for almost 4 years. Okay, after that, I stopped in between because of a lot of other priorities, and then now I started back again doing some trading for last 1 month. So, what I'm planning is I am going to go live every day, most possibly every day. I'm going to go live every day while I'm doing that trading for 30 minutes to 40 minutes or maximum 1 hour, right? So every day I'm going to go live with how I'm doing trading, what indicators I'm using, and how I'm managing my position, how I take a decision on entering a trade, when I'm taking a decision to not enter a trade, right? And how much of risk I'm willing to take on that trade, right? I'm going to show everything live, guys, for all of you. So you can just join that live session, enjoy the learning. That's absolutely not a advice of financial advice of any type. That's purely my learning and what I want to share, and what you can learn from it. You can feel free to join that session, and that sessions will be live every day morning 7:30 to 8:30, maximum 9 o'clock Eastern time. So you can feel free to join those sessions. If not possible to join, you can always watch it after the recording is done. After the live session is over, it will be online. For that, you need to subscribe to Wisdata channel. Then only you should be able to see those live sessions and the recorded sessions, right? So that's it, right? So that's what we are going to do. So I'm going to show you how I'm doing trading live every day. I'm setting up all the instruments needed for that, the equipments needed for going live. But before that, I thought, okay, let's make a quick video on what I'm doing, what is the instruments I'm playing with, right? Because futures is a big ocean, right? If you go online, you can get hell a lot of materials about futures and what is future, what is that, everything, right? But right, to just do a little bit of trading, what is the bare minimum you wanted to know about these future contracts, right? And that's what I'm going to cover in this. I'm not going to talk about every aspect of features, but I'm going to talk about the minimum aspects which everybody must know before they get into the futures market. Minimum, right? Minimum. Okay. You feel free to get more knowledge, but this is bare minimum, guys. I'm telling you, this is bare minimum you need to know before you get into this. Otherwise, please don't get into it. It has a high potential of risk. Please don't get into it, right? So the knowledge is very, very important before you get into any type of trading, and especially with futures trading, extreme knowledge is important. Bare minimum knowledge is minimum requirement to get into this trade. This is the bare minimum, right? So let's get into this trading. So first things first, right? Futures contract. What is the future contract? Okay. A future contract is a financial instrument through which buyer or seller agrees to transact an asset at a fixed price at a future date, right? As its name states, right? A future is a contract, future contract. Okay. So say for example, right now a stock Apple is selling at 160, and I am going and buying a future contract for 200 from now and 2 years from now, right? So I'm saying, oh, okay, from 2 years from now, I believe Apple will sell at 200, okay? So for that, I am purchasing a contract for 200 right now, okay? So that means if the price goes to 400, okay, people are willing to give those stocks at 200 after 2 years, okay? So assume that after 2 years the price of this Apple is like 300, okay? But since I have a contract to buy it at 200, I will get that Apple stocks at 200, even though the price currently in the market is $300, right? And that is the purpose of the future contract, okay? But right now, how it is used, okay? So this is what is the future contract. Future contract is a contract which a buyer or seller agrees to transact an asset, right, at a fixed price and a future date, right? That is simple as that, okay? That's why it was created initially, but as time goes along, people started using it for different purpose. That is the how part, how they are using this contract, okay? One, they use this contract to speculate, okay? Speculate the market, or to hedge the price direction, right? So as I always say, right? So if there is a big gap in the current price and our L1 levels, I most of the time take hedge. So assuming the market is going to get a pullback, when it gets pulled back, I get a profit of that hedge, right? So that is hedge, okay? The speculation is like the Apple example I said. I believe Apple is going to go 200 in 2 years, so I am buying that contract. So that is a speculation, right? Hedge means protecting your portfolio against your positive delta or negative delta. So it's a delta hedging, right? So if you have a positive delta in your portfolio for $1,000, then you hedge it for like 250 or 300 delta. Then it means you are protecting the loss of 1,000. Instead of 1,000, you are taking a loss of 750 because you have a hedge position for 250, right? That's what it means, right? So that is a hedging. And speculation is you don't have any stocks, but I'm speculating that, okay, I'm expecting this will go high, okay? And those are all the two methods of trading, okay? And we are going to do a short-term speculation, meaning, yeah, we are also going to use speculation as a method for us to trade intraday, but we are not going to do it for a long term, like 2 years, 3 years, and all. Just for today, for next 5 minutes, next 10 minutes, what is the speculation, right? That's what we are. So, what are the different types of futures available? There are futures available for index, energies, currencies, cryptocurrencies, and more, right? Stocks, right? Everything has its future, okay? But what we are going to do is we are going to only play with index futures, right? So index features. We are not going to play with stock features and currency features, crypto features, nothing. We are going to play only with index features. What are all those? I will talk about it in the next slide. Okay. So which are all the methods we use to do intraday? We either sell a contract to open and buy it back. Okay, meaning sell it for $50 and then buy it for $20. So $30 is a profit. Okay, so when I'm opening, so what does it mean? I'm going to do intraday trading in both directions. When I'm doing intraday trading, I'm not waiting for a bullish trend or a bearish trend. I'm going to play both directions. That's what it means. Okay, I open a trade to sell and then buy it back at a cheaper price, or I buy it at to open a trade and then sell it for at a higher price, right? So both trades we are going to do. So when I'm going live stream, you will see both types of trade I'm doing. So you need to understand what I'm doing right there, okay? Because I don't want you to get confused. Oh, what is this? You are selling without having anything, okay? So that's what it means, right? So sell to open, buy to close, or buy to open and sell to close, right? So those two types of trade we will use as part of our daily trading, okay? And risk, without proper risk management, this could be a big loss and the margin call, right? We need to understand what is a risk, right? So for that, you need to understand the nuances of a future contract, how much a minimum movement of a contract and what is the value of the minimum move, right? So if you don't understand that, if you just buy a contract, it could easily, if there is something bad happening in the market, it could just blow up your account like anything, right? So you have to be really, really careful about when to trade and what is your risk, right? That is the risk factor. And then capital. How much capital you want? So they call it as a margin. When you are doing intraday trading, you need an intraday margin, which anywhere it varies from $50 per contract to $15,000 a contract. Okay. So in Think or Swim, I paid around $12,000 a contract to do 1 ES contract trading, intraday trading. But at the same time, there are a lot of other brokers. Right now, I'm doing Trade Station where they get, I think, for $500 contract for intraday margin, right? So like that, there are many vendors provides many type of margin requirements, right? So it's based on purely what tools and vendors we are going to get that account with. Okay. So these are all the first level of basics. Next, how to get there. So now I know, okay, what is a feature, okay? How to get there? First is you need knowledge, and that is what we are getting here. You need knowledge, okay? The basic knowledge of what is a feature, how to trade it, what are the key nuances of a feature. That's what we are going to see in this session, okay? Second thing is future trading account. It's not a normal trading. You need to enable future trading in your account. If you have a stock trading account, you can't trade future in that. Specifically, you have to ask the broker to enable future trading because it comes with a margin. You need a margin account to do a future trading, right? So you need a specific account, or if your account supports that specific capability, you have to call your broker and enable that. And again, as you are enabling, you need to understand what is the margin requirement for trading any type of features, okay? and then some initial capital. Once you know, okay, now I have an account, I know 500 is my margin. Do you have that 500 initial capital in your account to start trading a future, right? So that is the third thing. And the last and finally important thing is proper strategy, right? Do you have a winning proper strategy, right? That's the edge for us, right? I have been building strategies for many, many years. I have written thousands and thousands of lines of codes in many indicators in Thinkorswim or TradingView or Python, bots, everything. So, but finally, I ended up, with a simple one indicator which helps tremendously improve our win rates of a particular investment strategy, right? So I have that strategy, so I have it built on Thinkorswim, I have it built on TradingView. So I'm going to share that strategy with you guys as a private share. So for all our members, you can use that for your trading, daily trading as well. So I will share it when you are ready to trade this level of thing. Then I'm okay to share my indicators and stuff with you guys. You can use that indicators to play along with me, right? Again, I'm going to show it live, but you can't copy my trade because there will be a delay on live streaming. But you can apply the same strategies what I'm going to teach you during that sessions. Okay, what are the key aspects we need to know about future trading, right? Now let's get into the specifics of money making, right? How much money you can make on a daily basis and what you need to know before you get into that, right? So as you see here, I have some 5 bullets, right? The first one is the tick size. Okay, you need to understand what is the tick size when you start doing a futures market, right? The tick size means the minimum movement of a future contract. Okay, see, for example, stock, how a stock moves, right? So some stocks can say, oh, okay, if for it to go from 10 to 20, 10 to 11, it can go 10.01, 10.02, 10.03, 10.04. That is the minimum move a stock can move, right? Right? And some stocks can say, oh, okay, 10.25, 10.50, 10.75, right? To 0.25 moves, right? That is the minimum move, right? So that is very important. We need to understand that minimum move for every contract, future contract. That varies for every contract, okay? So most of the time it is 0.25, some cases it is 0.5, some cases it is 0.1, some cases it is just 1, okay? 1 means it goes from 1 to 2 straight away, right? There is no middle point, 1 to 2, right? So as I show here, you see here, so 15,000, it's a NASDAQ, right? NASDAQ 15,000, it goes to 15,001 in 4 ticks, right? One minimum tick takes 0.25, so 15,000, 0.25, 0.5, 0.75, and then 1. So 4 ticks. It takes 4 ticks for NASDAQ to go from 15,000 to 15,001. That's what the tick size is. Okay, tick size means how much minimum movement the future contract can make. Tick value, right? The tick value means if it goes 1 tick, how much you make out of it. If it goes in your favor, how much you make out of it, okay? So how much you make out of it? So for example, ES, this is ES example, right? So here, whatever I have mentioned is an ES, okay? The tick value of ES is $12.50, okay? If ES moves from 1500 to 0.25, you make $12.15. Then think about it, okay? With the volatile market, if the ES moves from 15,000 to 15,100 points, right? If it moves 100 points, that means 100 into 4 ticks, 400 ticks. 400 ticks into $12.5, if you think about it, you lost almost about $5,000, okay? If it goes against you, okay? So that is the risk involved in it, okay? That is the, guys, remember, that is the big risk involved in it. If in a volatile market, when you are playing, If you don't know the risk involved in it, it is a dangerous thing ever, right? So you have to be really, really careful. But if you know the numbers, then you don't have a risk, right? If you have to know the numbers, right? That's all I'm saying. Okay. So tick value is for every minimum move, how much of money you can make. That is the tick value. Okay. And then point value is, so point value is nothing but how much is a per point, right? Per point is, so 500 to 501 for this is 1 point. 500 to 501 is 1 point, right? For 1 point, how much you make? Okay, so for 1 point, $50 is what you make. That is already decided. Okay, for 1 point of ES, this is specific to ES again, right? ES is S&P 500. For all the other instruments, the things are different. Okay, point value is the value of 1 point move. 1 point move means 15,000 to 15,001, right? That is 1 point move. But how it can move from 15,000 to 15,001 depends on the tick size, right? If the tick size is 0.25, then it takes 4 ticks to move here. If the tick size is 0.1, then it takes 10 ticks to move here, right? That is what, guys, you need to know, right? The tick size and the point value, right? So when you multiply the tick size and the point value, you get the tick value, right? That is what here I have put. Okay, so the tick value equal to tick size multiplied by the point value. You get the tick value, how much tick value you will make, right? And then margin, we always talked about for trading one margin, one contract, how much margin you need to have in your account. That is very important. Okay, so for every instrument, it is different for different brokers. You need to understand that better. Okay. And then the last thing we are going to see is what are the contracts specifically we are going to play, and what are the different types of contract in the market. Okay, so in index primarily there are two types of contracts. One is mini and micro. Okay, so micro is so small, mini is just a mini contract. Okay, now a normal contracts. Okay, so ES is the ticker symbol for ES for S&P 500, and then NQ NASDAQ. YM is Russell, RTY is Dow. And same way, micro contracts, the micro ES, MES, MNQ, MYM, M2K are all the respective contracts for. What is the difference between mini and micro? So in mini, okay, the tick value and the point value is different for mini and micro. Micro is very less, mini is very high. Okay, that's what we are going to see in the next slide. Okay, so as you see here, it is the same instrument. Okay, same instrument. Okay, so if you look at ES, MES is the ES. Okay, but as you see here, the point value for ES is 50. At the same time, the point value for MES is 5. Okay, what does it mean? That means our tick value is way less than ES. Okay, so that is how it is different. Okay, so why we need to know about it? Because to start with, when I am teaching, I am going to play only this M and Q, because M and Q, if you look at it, the tick value is very, very low. Okay, once we get familiarized with M and Q, our strategies work properly, and we know how to make trades, how to enter trades, and then we will move on to the mini contracts. Okay, right now the thing we are going to do is micro contracts. Okay, so this slide will give you a clear indication of each and every point value and the minimum tick size and what is the tick value for each and every contract. We are going to play M and Q always during our live sessions, because it has a very less tick value. So we are going to play with that. Why not the other two things which also has less? Because that has a very less volatility. So we will not use this. We will take a volatile thing so that we can easily play with it. Okay. So guys, this is what minimum you need to know about future contract trading. So just repeat this video multiple times, learn about it. Minimum, I taught you just bare minimum things needed for future trading. Go through it, make this fundamental strong, clear for you. If you need more knowledge, do a research, get to know about it, and get ready for the futures trading. We will see you in the live sessions very soon. Until then, happy trading. Have a good day. Thank you all.